I think we need to hang our hat on the consumer, and in terms of confidence as a catalyst and what will propel these markets higher. What concerns me is that utilities and telecom have led us to new highs this year so far, so that's very defensive sector. You're also seeing gold climb on the backs of this, walls of worry and global instability. But with the 10-year this low, there's these statistical anomalies, the 10-year setting record lows and the stock market setting record highs. One of the two will have to be reconciled. But I get it. It's the TINA trade. There is no alternative, right? I mean, when you look at bonds where they are at 1.58% on the 10-year today, didn't budge much, even though we have all this global instability. People are flocking to the U.S. stock market as a safe haven.
But there's a feeling, Heather, I mean, people are, in the aggregate, I mean, we're overgeneralizing, but that's understandably so. But people generally have been investing in for yield, not for growth. And there's a fear out there that that's going to come back to bite those investors at some point.
Yield
Do you share
compressions.
that?
Yes, look at the spreads on the highest yielding and the lowest yielding sectors within the S&P 500. It's about 2.6%. What does that mean? That's yield compression. That's tight spreads. Investors are chasing yield. I get it, and bidding up those asset prices. They're pulling the yield down.